What's up everyone, it's Caddy with MoneyVest. So I have moved into my new apartment today in Dubai and I'm still waiting for the Wi-Fi to be installed, for the AC to start working, for electricity, and for, holy shit, there was a freaking bee on my neck. But anyway, so as I was saying, I wanted to record this video and basically go over a very important message and lesson when it comes to investing long term, okay? Because this is a really interesting topic of discussion in our Discord earlier today. One of our very amazing members, Sandeep, he talked about long-term investing and basically a buy and hold strategy of individual stocks. And I wanted to share my 2 cents, my thoughts on this perspective. And again, I'm not picking on anybody here because again, I use these as case studies and for us to really understand the lessons. That's what's really important, is the timeless lessons of investing. I'm going to back that up with actual statistics and data, and of course backed by Warren Buffett as well. So I'm not saying my thoughts, my opinions out of nowhere, but these are formed and these are basically established after looking at a lot of data and a lot of statistics, and I'm sure it will make sense for you as well. So I hope you guys enjoyed this video and find it helpful. Make sure that you drop a like. Don't forget, subscribe to the channel. There is a 16% annual discount that's available for tonight. After tonight, it does expire. So link's going to be down below. Don't forget, fundamental and technical analysis courses are also 50 to 60% off. Coupon code LABOR4, and that does also expire on Monday. So links are going to be down below. So this right here was what Sandeep posted. Basically, there was a tweet from another user that mentioned that Nvidia shares closed at an all-time high today. Nvidia is now up 212,000% since going public in 1999. So in the last about 24 years. If you invested $10,000 at its IPO, obviously you'd be up $19.5 million. In the 24-year journey, the stock is up. It dropped over 50%. So it's been cut in half 12 times. And dropped over 90% twice, okay? Would you have held, right? So that's the real question. And then Sandeep basically followed up by saying, all right, hold on, where did I put that? I think it's this one right here. Let me just pull that up first because it's important for the story and the context. So he basically says that this is an outstanding example why just holding great companies and buying the dip is the way to invest. Everyone looks at Nvidia's recent fall and run up, but look at the journey you get there. 12 times down 50%, twice dropped 90%. If you just DCA during those times, you literally made generational wealth, even if you didn't buy the IPO as mentioned. This is how real long-term wealth is built, and this required a lot less work, much lower risk than trading or other strategies everyone seems to be promoting or trying. So let me explain to you how much of an, again, I'm not picking on anybody here. I'm really not, but it's coming from an area of experience and understanding of risk and reward. That message is very flawed, and unfortunately, it's a dangerous message as well. Because let me explain. Allow me to explain. Okay, and the reason why this is not a very good sort of style. Look, I agree with buy and hold. Okay, I do buy and hold. But there's a difference. There's a difference when and with what buy and hold works and with what it doesn't. Okay? Buy and hold forever, for the rest of your life, buying on dips and dollar cost averaging at every opportunity, every red day, works wonders with indexes. Okay? It works absolutely incredibly well with S&P 500, the NASDAQ. We're talking aggregates. We're talking aggregate indexes. And the reason is simple. Because the S&P 500 and the NASDAQ includes all companies, right? It includes every single one of them. All largest 500 companies in the market. The NASDAQ 100 includes the 100 companies, right? Volatility is another reason. It's a lot lower. How many times is the S&P 500 now 90%? Zero in the last 100 years. Zero. Last time, probably the Great Depression. But since then, zero. 40 to 50%, I can think of maybe 2 times. The Great Inflation of 1970s, 2008, Great Financial Crisis, maybe the dot-com bubble. I think it was down like 30 to 40%. 2 to 3 times, okay? Volatility is a lot lower, and you've got the opportunity to aggregate of all companies. When it comes to individual stocks, buy and hold forever does not work. Let me explain. And you would be opening yourself up to huge amounts of error if you actually end up doing that. So let me explain this in a little bit more detail. I basically mentioned, very true, Sandeep, and I fully agree, but I will add that for every one Nvidia that is successful and goes up 212,000, there are probably hundreds, if not thousands, that fail and eventually go bankrupt. We can take the exception of Nvidia and make it a rule. Case in point, as Warren Buffett said, if you bought and held the top 10 companies in the 1990s, actually it was the 1980s, I'll go over that article in just a minute, half of those are bankrupt and the other half became irrelevant. And these are the top 10, top 20 companies by market cap in the 1980s. Where are they now? Absolutely irrelevant, right? They're no longer relevant. Some of them are, some of them are not. And the buy and hold strategy works wonders when it comes to S&P 500 and NASDAQ, but with individual stocks, you can't buy and hold forever. And companies evolve, and technologies evolve, management becomes complacent, right? Future is unknown. So Nvidia is the hot stock today. I fully agree, and it's one of the best companies to own, no doubt. But maybe 5 years later, there's a new Nvidia, right? That's exactly why active research and analysis is needed for individual stocks. For indexes, buy and hold forever, no problem. And these are just my 2 cents. And this is the article, right? This is a special lesson Warren Buffett gave new stock investors at his annual meeting. That's exactly why I'm talking about. It's coming from an area of more experience and understanding of why buy and hold for individual stocks does not work. And I'll also go over some of the very key nuances of this tweet and why it's so important to kind of pay attention to it, because obviously he says, buy and hold great companies. How do we know which are great companies and which ones would be great companies 5 years from now? Do we know Nvidia is going to continue to be a great company 10 years from now? Do we know that Tesla is going to continue to be great companies 5 years from now? Do we think Apple is going to continue to be a great company 2 years from now? That's the thing, right? We don't know, because investing is very much dependent on the future, and future is unknown because a lot of things change, right? So the hot shots from today may not be the hot shots 5 years from now or 10 years from now. That's why it's important to understand the risks involved with individual companies, right? And this is a special lesson. And this is exactly what Warren Buffett also talked about. He basically said the lesson was about the uncertainty, right? Uncertainty around individual stocks, comparing top 20 stocks in the world by market value as of March 31st of this year and comparing it to a similar list of 1989, okay? The top companies in 1989 included the Industrial Bank of Japan. You've got ExxonMobil, General Electric, IBM. And the list today obviously includes Apple's and Microsoft's and Amazon. The billionaire noted the value of these top companies in the world, Apple worth more than $2 trillion, has increased significantly. But importantly, there was not a single company on that list that was there in 1989, meaning the entire list of 20 companies in 1989, that entire list has changed 30 years later to a whole new different companies in 2021, 2022. And Warren Buffett says, we were just as sure of ourselves as Wall Street was in 1989 as we are today. But the world can change in very, very dramatic ways. Always remember that line. The world can change in very, very dramatic ways. Okay? That's my only lesson, is for you to understand that the top companies today may not be the best, most efficient, most well-run companies in the future. Heck, I can even put a bet that the most influential person is Elon Musk today, but the most influential person may be just getting born today in 2023, and in 20 years from now, 30 years from now, at 20, 30-year-olds, there could be a new person. So the idea to simply buy and hold great companies forever, based on what we know today, is flawed because we don't know the future. Nobody does. So that's why it's important to constantly understand the risk factors. Understand, okay, what if, for example, Apple's management becomes complacent, right? They don't innovate. They don't invest. They change the entire brand. They change the entire leadership. They change the entire philosophy, right? They change the products. They don't listen to their customer. A number of things can happen. New technology comes on board, right? Consumer behavior changes. It's not an exhaustive list, but it's just one of the many things that we need to understand, that economies evolve, technologies evolve, consumer behavior evolves. And here's another thing. 1,000 plus. So in the last 5 years, I did some math and I did some calculation, right? Because I wanted to go over Nvidia more specifically, kind of help you guys really bring it home. In the last 5 years, okay, the number of stocks that have rallied over 1,000%, right, that have 10x'd in the last 5 years is just about 100. Okay, it's just about 100. This includes your Nvidia, this includes your Tesla, this includes your Apples, this includes your Microsoft and Amazons and AMD and even Neo and a lot of these companies that have rallied over 1,000% that we seem to love. They're up 1,000% in the last 5 years, right? There's only been 100 stocks in the U.S. out of 7,500 companies. What does that come out to probability-wise? 1.3%. So of all the stocks in the US, only 1.3% of them actually went up over 1,000%. Not to mention another statistic that I've got for you. Not to mention that since last 50 years, or actually I think it's going back since Great Depression, there's been over 20,000 publicly traded companies. 20,000. How many do you think have gone up over 300,000% in their lifetime in terms of gains? How many? Let's take a guess. I don't know the answer because there's no specific answer for this. I was trying to find it, but I can tell you it's definitely going to be less than 50. It's definitely going to be less than 50 number of stocks, number of companies that have gone up over 300,000% in their lifetime out of 20,000 that have been publicly traded. That, my friends, is a probability or a statistic of less than 0.5%. Less than 0.5%. Think about that for a second. In the last 100 years, of all the stocks that have publicly been traded in the US, less than 0.5% went up over 300,000%. So what is our probability of obviously finding Nvidia? It's rare. It's really rare. It's very, very, very rare. So we can't take Nvidia and put it on a pedestal and be like, okay, buy and hold forever. It's going to make us generational wealth. It doesn't work that way. Investing is hard. Investing is really hard. It's not easy. If it were easy, everyone would be doing it, right? Everyone would be successful in investing. Everyone would be doing it. So there's the lesson. And one more thing I want to point out is that it's very easy, right, for this message to be seen as like, if you just dollar cost average during those times when the stock is down 50 to 90%, how many people have the stomach to dollar cost average when the stock's down 90%? Let me rephrase. You put your life savings, or let's just say that you put X amount of money in a stock and it's down 90%, right? So you've practically lost 90% of paper value into that stock. Would you or would you not dollar cost average? See, these are the type of things that you can't just simply put in words. It's more than that. It's far more than that, because in the moment when your portfolio is down 90% in a stock, what are you going to do? You're most likely, your emotions, you can't experience it until you actually experience it, right? You can't know until you actually go through that process. Right now, sitting at home, sitting at office, whenever you're watching this video, you can be like, okay, if I'm down 90% on a stock, what would I do? And now that you know, and it's Nvidia, and Nvidia, you've got that hindsight, be like, okay, Nvidia is like a very, very strong company, right? It's gone so much. Yes, of course, Caddy, I would dollar cost average. No, you won't. No, you won't. It's hard to envision that, right? Because you're not actually experiencing it. So words can definitely make it a lot easier and more simplified, but it's not really that simple. So I just wanted to kind of post this video, kind of help you understand. So it's more about being reasonable with your expectations versus being rational, right? And that's exactly what's been talked about in Psychology of Money as well, that what may be the most rational strategy on earth may not be the most reasonable one. How many people you know can stomach a 90% loss in their portfolio with one stock? I don't know that many. Heck, I don't even know one person that's going to be willing to say, okay, I'm fine with a 90% loss. There's not that many. So that was my 2 cents on this topic. And the bottom line is that, look, buying and selling individual stocks and being more active is one of the best ways to actually perform better than the market and be able to outperform. But it does require research. It does require a lot of analysis. And not only that, it requires a lot of updating that analysis and doing that maintenance work. Because if you start to slip away from that, then obviously things like PayPal happens, right? Which is what I'm going through right now. PayPal blindsided me significantly, and it's down 75% from its all-time highs. Hey, 3 years ago, PayPal was a great company, wasn't it? Meta was a great company, wasn't it? What happened? What happened to buy and hold forever, right? That's what I'm trying to get across in terms of that messaging. So hope you guys enjoyed this video. Again, I know there's going to be some agreements, some disagreements. Let me know in the comment section down below. As always, happy investing. I'll see you all in the next video.